So today we're going to present our study on assessing the potential scale of trade misinvoicing in South Africa. This was a project that Jan, who's also joining us, did while he did an internship with us earlier this year. And Codera has been partnering with Stratalise to do economic analysis using the trade data that they provide. And so this project is aimed at just drawing attention to I think a very important trade and economic issue. Just by way of introduction, there's been an increased focus on enforcement of around things like mineral smuggling in South Africa over recent years. And so we wanted to look at the potential scale of trade misinvoicing in South Africa, because there is legislation that bears on mineral resources that imposes royalties on sales, as well as export levies on things like chrome or scrap metal, which may incentivize underreporting of sales. So we wanted to see if there's any evidence using trade data of trade misinvoicing. Now, it's worth just defining what trade misinvoicing is, but the broad definition is that it's a mechanism that's used to facilitate illegal or illicit financial flows. And this, of course, is of concern because it also implies potential foregone tax revenue. So tax or trade misinvoicing is anything related to the deliberate falsification of volume, value, or commodity or good type in the way that trade flows are recorded by at least one party in an international transaction. Now, it's quite difficult to assess the potential scale of trade misinvoicing because you need mirror data, trade data from both countries involved in in individual trade transactions. And so what we're going to be doing today is we are looking at data that's publicly available as a starting point. So this is certainly not the final word on this important issue. We wanted to assess what public domain data says about the potential scale of trade misinvoicing. And importantly, we wanted to discuss the data challenges that make it difficult to assess this accurately. So the paper that we've released, and you can the link on the slides, and it's also on the Codera website, summarizes in a lot more detail the results from our study. But we wanted to draw attention to the fact that there is very little academic or policy research on this issue, and that one of the reasons for that is that there's such challenges with data access. And so the work that Jan has done to compile the data in a comparable format has enabled us to at least say something about potential problems with data quality. And the paper goes into a lot more detail than we'll cover in the presentation. We'll just focus on high-level results. But one of the big issues in South Africa is that some data categories are not available. So, for example, it's difficult to get detailed information on gold exports, which is South Africa's largest export category. And so it's not possible to assess the potential extent of illegal gold mining and gold exports, which may be particularly prone to under-invoicing. So it makes it really difficult for this to be assessed, and for us, therefore, to assess the potential tax revenue losses associated with that kind of activity. Then, as a result of the data limitations, we focus on mineral exports, which in South Africa covers a large proportion of total exports. But the other reason we decided to focus on on exports is the lack of available mirror data for South African imports. So that's a very big data gap. And so this study is focused on commodity exports, and we also limited it further to focus on only commodity exports for which there was good data available. So the good thing about that, though, is that this enables us to compare our results to the results from other studies for South Africa. And in the paper, we detail how our figures compare to those from others. But we also go to a lot of effort to compare the Comtrade data that we used to South African revenue service data that we obtained from Stratolize and is available via our data portal, Econ Data. Right. So, and then finally, what we do is we compare South Africa to other countries as well. So we have a cross-country comparison that shows whether South Africa is unique or whether the Comtrade data also suggests that trade misinvoicing is a problem for other commodity exporters. So just briefly on what we find. We find evidence, at least on the data that's publicly available, of systematic under-invoicing for several categories of South African commodity exports. That said, we highlight lots of problems with the available data that make it difficult to draw strong conclusions. But if you take our estimates literally, then the scale of foregone tax revenue over our sample, which is between 2015 and 2024, is very large, and so large as between 30 and 50 billion. So that would cover, presumably, would completely cover the cost of actually strengthening enforcement mechanisms, and so trying to address potential trade misinvoicing. Of course, our study does not include gold and other categories which may also be prone to misinvoicing. One could think of that being a big problem in imported goods or also in international services trade. So certainly not the final word on this issue, but I think our paper draws attention to a number of important policy issues. Excuse me, I've got a bit of a cold, so I might cough a couple of times. Yeah, so let's just say a little bit about how we measure misinvoicing. We are focused on trying to identify potential illicit financial flows, so we focus on trade values, although one could also look at trade volumes for this kind of work. And what we do is we compare illicit or outflows from reported by South African exporters compared to the data that foreign importers report. So what we do is we look at the value of imports for a commodity K from a country I for a period T, and we compare that to the value of exports as reported by South Africa, as reported by South African exporters, where beta here is a factor that we use to account for the costs of freight and insurance. And we used a factor of 8%, but one could easily change that as well. Then if you get a positive value, that's indicative of potential export under-invoicing, while a negative value would indicate potential over-invoicing. So what we do to make figures comparable across years is we calculate the ratio of these differences as a percentage of trade. So we both present data in Rand billion terms, but also in percentages. Now, there's a whole raft of potential challenges when doing this kind of work, which we won't go into today in a lot of detail, and I invite you to go and look at the paper for more, but they relate to things like re-exporting, which can make it difficult which can make it difficult to identify trade misinvoicing, but also just general completeness of data. And so I've mentioned that gold as an example, gold country level trade data is not available for South Africa, which makes that kind of analysis impossible. But we've restricted our assessment for commodities where at least 75% of trade value is available, both on a are available. And so we focus on commodities like chrome, coal, copper, iron, manganese, and platinum, which together cover a very large percentage of South African exports. Okay. Now, it's probably worth saying a little bit more about some of the data challenges that you face when doing this kind of work. So what Jan's done here is just plot the distribution of estimates of export misinvoicing for each year between 2015 and 2024. Now, there are many extreme values in the data, which may be data errors or maybe just incomplete data. And so we present two sets of results in the paper. We present a set of results that we have not cleaned, and then a set of results which we've called the restricted results, where we discard observations where the misinvoicing values are greater than the free on board values for that category. And so I'm going to just focus on the restricted sample in this presentation, but the full set of results are available in the paper. So jumping straight to what we see. On this chart, we've got just a summary for manganese and platinum. Now, both of these commodities are important because South Africa is a major exporter globally of these commodities. And they also represent a very large share of South Africa's overall exports. Now, if we look at manganese and for platinum, you can see that most of the bars are red, indicating potential under-invoicing of exports. And so to give you a sense of the scale, you can see that the proportion, when you express it as a total, as a share of total free on board value of exports, is very large. Regularly, it's above 15% of total exports for that category. And you can see that there is for the last part of the sample, consistently evidence of potential under-invoicing. And when we look at a number of other categories, we see similar patterns. Overall, an assessment of net under-invoicing across the full sample for a number of other important exports, such as coal, chrome, copper, or iron. And again, the values are very substantial. You can see in the case of copper, very high percentages, and very high percentages in the case of chrome. So there could be many potential explanations for this. And the paper, we detail several of them. We look, for example, at the potential for that re-exporting is affecting the estimates. And so, for example, if we look at coal, because we know there's been a shift in coal exports to ports in Mozambique, for example, South African exports that are exported overseas via Mozambican ports, which means that you can see, for example, that if we look at our trading partners for coal, you can see that the value for misinvoicing for Mozambique is 102. So that's highly negative. And this may be explained by re-exporting, reporting that's different between exporters and importers, where South African exporters report coal as being bound for Mozambique, when in reality it is simply being shipped via Mozambique, and there is no corresponding record by Mozambique. But it's worth pointing out as well that when we compare the CompTrade data to the SARS data, apart from 2015, the values are very similar. So it doesn't appear that the fact that we use CompTrade for the assessment affects our conclusions. And we also show in the paper that we looked at the way that we used exchange rates to convert trade into common currencies, or the way that we assigned trade to specific calendar years when we plotted them on the charts. And then we also, as I said, looked at re-exporting behavior across each of the categories, and you can go into the appendix of the paper for more detail. Then, as I said, it may be that trade measurement is particularly bad in South Africa, and so the issues that we identify are South Africa specific. But we also wanted to see if this issue is unique to South Africa or common across other commodity exporters. So we looked at Australia, Chile, Brazil, South Africa, and for this collection of different export commodities. Now, what you can see is that the CIF value of reported by the importing partner versus the free on board value reported by the exporter plotted against each other. So, and we've also adjusted these for freight and insurance costs. So what we show is if you'd expect every commodity to sit on the 45-degree line if there was no misinvoicing or no data measurement issues. You can see that there is potential trade misinvoicing for several of the commodities for several of these countries. But you can also, so you can see that they lie above the 45-degree line, although there are several that lie more or less completely on the 45-degree line. It's also interesting that you see, for example, for Chile, for manganese, you see an outlier here, which may be as a result of an outlier for that commodity for that year, so 2024. So, what this data reveals is that there are some missing free on board values in the data set for some years, and we find that it's China data that's reported by China that's often responsible for these outliers. So the data limitations are not just limited to South Africa, but it affects many countries, and it compromises our ability to accurately measure trade flows. And then lastly, you can see that the clustering of countries along this 45-degree line suggests that the use of an 8% CIF factor is a reasonable assumption. Oh, sorry. So just to conclude, so we have lots of time for discussion. We look at a small number of South Africa's export commodities, but we find a large rand value in trade misalignment, trade misinvoicing over the period 2015 to 2024. And this represents more than 13% of the value of exports after we adjust for freight and insurance costs. There are two explanations that beyond misinvoicing that could explain our findings. And it could include the way that processed commodities are being recorded, their trade is being recorded. And it could also be the fact that that imports from South Africa are valued differently by the counterparties that report that data. But it's impossible for us to really investigate this without additional data. So if there is one message from that you remember from this paper, it is that you really want to do this kind of analysis at individual trade level, so that you can investigate the value and the volume of specific trades as reported by each counterparty to that transaction. But it's very difficult to do without the kind of detailed mirror data that you need to do that at transaction level. So we have tried to demonstrate that the scale of the implied misinvoicing is very large with the data that's publicly available. And if that data are accurate, then what it would mean is that there's very large fiscal revenues that are being foregone, and it would mean that it would make sense for our fiscal authority to invest resources in improving the quality of data and the ability for them and for those involved in trade and the academic community and interested in these issues to be able to measure and monitor for things like trade misinvoicing. So that is a very short summary of the paper. It'd be good to have a conversation about this. We have, as I said, we've got Jan on the call as well, who's the main author of this work, and a number of other trade specialists on the call.
Might I just add something before we take the questions? Thank you, Daan, and thank you very much, Jan, for the effort you put in. The comment on Mozambique is interesting. There's a technical reason why that sometimes happens. So it's worth perhaps explaining for a moment how the process of clearing goods out of, or for that matter, into South Africa, but let's focus on the out of. So what happens is you will have a company, let's say it's a chrome miner. They want to do an export to China. The ports in South Africa are not working well, and so what they do is they decide they're gonna export it through Mozambique. Now that should be cleared as a transshipment, and a transshipment you can think of like having a pipe between South Africa and China, which just happens to run through Mozambique. Now, the way that entry practically works is the mine would speak to their clearing and forwarding agent who would frame the entry. They'd say, we want to do this as a transshipment. That entry is framed on a piece of software called a bureau. There are, I don't know, 15, 20 of these things around, which is effectively a switch. It's a connection between the clearing and forwarding agent and SARS. And that is where the rules are actually enforced. So when we think of the compliance rules that actually happen at SARS, they happen inside the software company. Now, not all software companies are created equal. And so for some of them, they do not allow the transshipment entry to happen. And so what practically happens is the company then posts an entry to Mozambique. Of course, it's not really an import into Mozambique. It's just going through Mozambique. So it's a software glitch that very often is causing this problem. It has, however, profound implications, and this has not been addressed. I mean, I see quite a few people from SARS here. This is a problem that has to be addressed because it creates an impression, for example, that our trade with Mozambique is absolutely enormous, which it completely is not. And that changes how we think, for example, of our trade with SADC, because these exports into Mozambique completely dominate. And so from a trade policy perspective, we're effectively working with incorrect data. And that is a problem, but it is a problem that the software companies have to fix. Now we know that this is not a consistent problem across all of the companies because we can also see some transshipments going through. So SARS has to apply pressure to the software companies to fix up that particular problem. Which is nothing to do with your assessment, but is just perhaps worth noting. It is very, very distortive. I see we've got a couple of questions. Martin coming in hot this morning with the questions. Martin, I'm going to, in fact, because you've put so many of them up here, I'm going to ask if you can please unmute yourself and state your question more directly, or your 5 questions. Thank you.
Hi, Donald. Can you guys hear me?
Yes.
Yes, sir. Crystal clear.
Yes. Yeah, I think for me the main issue is we know this is a very complex and challenging topic, and therefore I tend to steer away from calling it misinvoicing, because misinvoicing is really a subset of the potential reasons, and we really have no idea unless you have commercial documentation as to the magnitude of what you term misinvoicing. I would post that the biggest deltas we are seeing is misreporting. And one of my questions was, as an example, just I haven't looked at the paper, but if I just look at your method, as an example, the Manual on Trade Statistics require us to report imports for exactly this type of reason at FOB levels. And technically, in the UN Comtrade, all the countries are supposed to report at FOB levels, although in practice they don't. So my question that was kind of in the middle of that comment was, how do you account for, shall we call it, reporting differences based on definitional differences between countries? Because that's the first thing that you need to consider. You can't simply blanket go and apply a CIF or component as per your example of 8%. That would immediately put most of the data that you look at in any case incorrectly for your analysis, because most of the data would be at FOB equivalent basis in Comtrade, unless you explicitly extracted data where you extracted at the CIF level and not at the imports at FOB equivalent basis. So that was my real question. But I think a general comment is, I think we must be very careful for calling it misinvoicing. That's a very, headline grabbing statement, but it's very far from the truth.
So Martin, that's a fair point. We everywhere in the paper we use the phrase potential misinvoicing, but I think
it's not even potential misinvoicing. That's why I'm saying is we have no idea what misinvoicing, because remember that implies criminal intent.
So your point is completely fair. I think we tried in the paper to discuss the incentives that importers and exporters face, and we touched on some of the measurement challenges. But as I said, this was an intern project to try and have a kind of present a first cut about what the data, whether you can use the data to identify misinvoicing. And the conclusion of our paper is that one should be very careful when using the data, and there should be more effort put to improving the quality of the publicly available data. But I think your point is completely fair.
Sure, and I support that kind of synopsis of yours. I think one must just be careful, as I said, to use the term misinvoicing even in a paper like this is misleading, and you can actually raise more issues than what you're trying to solve. I think one must start with a focus, and you are doing it by implication, saying that the data quality is the challenge. That's the real thing that we need to resolve. And then once you've resolved that, you can probably, start focusing on misinvoicing. But I would pose that would be a insignificant component. It may be big on a particular line, like gold, as you mentioned. But if we look at the volume of information that's captured in general in the trade statistics, without being able to prove it, I reckon that the matches between countries, when you consider all of these technicalities, etc., will be much higher than what you would expect. Because remember, most people are not trying to bullshit the system. Most people are not trying to perpetrate corruption or misreporting, etc. So I don't think that would be so prevalent.
So, Martin, a few comments on that, but I think it's a really valuable input. So thank you. I'd maybe add a few things, which is sort of complicating this. So the United Nations actually has two standards for reporting trade statistics. South Africa, without getting into all of the details, uses the more modern version. The US, for example, uses an older version. This is part of the problem that happened with Liberation Day last year, where President Trump accounted for our gold exports, which are very often not South African gold. Remember, we're like a giant vault for gold from places like the DRC, who send their gold here, get it refined here, and then store it here, but it's not ours. Now, the way the reporting standards have not been universally adopted has created some problem. So we've just note that. There's another side to this. I mean, Daan and Jan have focused very much on the export side. We do a lot of work on the other side of this, which is the circumvention, and the term is used very deliberately, Martin, because it is a criminal act, and the circumvention of duties through under invoicing, tariff classifications wrong, etc. And again, we can identify that the likelihood of much of that circumvention being accidental is quite small. So we have an ability, just using some statistical models, to separate out what looks like an error and what appears to be deliberate. And there is an increase, without a shadow of a doubt. If you take a 15-year view on that data, the number of incidents of what is effectively customs fraud appears to be rising. Now, I mean, that's a problem only SARS can deal with, and SARS is the only person that ultimately has enough of a data set. But statistically, it would be very, very unusual if we were incorrect so frequently. So I would back the fact that this is a growing problem. And unfortunately, this ends up very often catching the innocent with the guilty. So, I'm not suggesting most companies are attempting it. I'm just saying the number of times we see attempts at circumvention are without a doubt rising.
Do you want me to respond, Donald?
Oh, you can. It was a comment, but if you want to respond, please go ahead, and then we'll take Jan's comment.
Yeah, sure. So I definitely agree with you that most probably over time it will increase. But again, it's because of the fact that we are seeing that the quality of reporting is the foundational point that needs to be resolved. And obviously, as times get tough and people also see no consequence, because when these things do happen, the quality of the data doesn't allow us to pinpoint and pick up on those type of transactions, and therefore, there's consequence. Then it's human nature to try and bend the rules more and more as we go along. So I would definitely agree with the statement that it's probably increasing. But bottom line is, it would be interesting to see if one could, for instance, take some of your highlighted example commodity lines, whichever you choose. I wouldn't propose that the gold one be used because of what you indicated, Donald. There are quite a lot of complex issues around gold. And again, that kind of proves the point. It's misreporting or misinterpretation of what is reported, as opposed to deliberate misinvoicing. However, there are lines that maybe you should reach out to our SARS colleagues and ask whether, under an NDA, you can do a bit more of a detailed analysis to see, whether there is any substance in this high-level kind of identified potential areas for further investigation.
So Martin, we work very closely with SARS on these sorts of issues. So that's a process that's already happening. I obviously can't go into all of the detail here, but the simple answer is we do a lot of that work with SARS. That is completely separate to what Daan is talking about. But if you're interested, give me a shout. We can have a cup of coffee, and I can talk you through some of that. Jan had his hand up earlier, so I'd hate this to be a Martin Donald conversation. Jan, please go ahead.
Yes. Hi. Yeah. Hi, Martin. Thank you for the input, and I do take the naming what we name this phenomenon point very seriously. You mentioned something about the FOB and CIF values. I think it's just probably worth clarifying again that on Comtrade you have the CIF values available, as well as the FOB. So when it's imported, it gets reported as CIF. And I'm not sure how rigorous the reporting is for a counterparty's FOB reporting. When they're reporting an import, they will report the CIF value. They don't necessarily know what the FOB value would be, as far as I'm aware. So what we did then is compare the export FOB to the import CIF of the corresponding value. Does that make sense?
Jan, if I may respond, no. I think the point is you need to go and check because countries follow different standards. As Donald indicated, there are two different standards, and at the moment, so it's not a question that they don't know. Countries like South Africa do report imports at FOB equivalent to the UN. So when you pull the import number from the UN, it is at FOB. Another country, maybe, and I'm just taking an example, I do not know, I haven't checked, like Zambia might give the same, they think they give the same number, imports, but theirs includes CIF and is not actually reported at FOB equivalent. So the point is, before you simply analyze the numbers, you actually need to go and look at each country that you're investigating to determine on what basis do they submit to the UN. That's what I'm saying, because this is a formal requirement and countries know on which basis they submit to the UN, and the UN knows that as well. So, and then you've got to consider when you look at your data that you're sitting with a mixed set of data, although you may have pulled the same concept, unless you actually make sure that you look at everybody in CIF terms, which would kind of defeat the purpose because you are trying to take out the CIF. So what you should do is look at all the countries that do not, they actually follow the modern standard. So they look at it FOB equivalent imports. And then for the ones that do not report that FOB equivalent imports, for those you potentially could, take out an 8% CIF on average. Again, that's a very broad average. But the point is just your base for starting the analysis should be the definition or the system that they apply for determining at what level do they report. Because otherwise, you're potentially adding a CIF or removing a CIF component where you shouldn't be. That was just why I mentioned that.
Right, yeah, I understand what you mean. Mixing the data. Thank you.
Thank you so much for those comments, and thanks Donald and Nadia for hosting us. Yeah, I think maybe just to reiterate, what we are trying to do with these policy briefs is draw attention to important policy issues. So I think I'm really pleased that it's sparking some interest and some discussion, because we think it is very important. Data quality in South Africa, not just data quality, but the data availability in South Africa is starting to fall behind many of our peers. And so I think it's an area that we're trying to highlight more policy attention is needed. And certainly this is not supposed to be an authoritative piece of work. It's supposed to be something that just highlights some challenges with the data that requires attention. So thank you for engaging with the work. We really appreciate it, and thanks everyone for joining.
Daan, maybe as just a closing comment, could you just take a minute to tell everyone what kind of data they can obtain from Codera? We're huge fans of the work Codera does. So for those of you who don't know, Daan, maybe you could just take a moment.
Thanks, Donald. I'll do a bit of self-promotion. So what we're trying to do is democratize access to data. So we work with a lot of official statistics, which we obtain from Stats South Africa and others, and we make it easy for users to access the full data sets in an easy-to-use way, whether they code or whether they want to access it in Excel. But specifically with respect to trade, we work with Donald's group and Stratolize to make it possible to access aggregates of the cleaned SARS data to be able to summarize monthly movements in import and export volumes and values by category, so understand what is happening in trade flows month to month, and for that to be easy. So we do that with a lot of public domain data, but we also work to develop alternative statistics to help the public and our clients understand what's going on in South Africa in real time. So that's where our interest in these kinds of topics comes from. So whenever we have a new data set, we try and then look at what interesting questions we can answer using it. And so this is one where this project came from.
All right, guys, thank you very much. Have a wonderful day. Nadia, will you handle the circulation of the report to everyone later?
Yes, I will send everything to everyone that registered.
Excellent, guys. Have a good day. Bye-bye. Thank you, Martin, for your input.
Bye-bye.
Thanks, everybody. Bye-bye.
Bye.